Hey everyone, Gary Carpenter here with the Master Real Estate Academy. Today I'm sitting down with two of the most experienced REO professionals in the business, Leisey and Pam Boulden. If you've ever wondered how the REO process really works, from the foreclosure auctions to how asset managers decide who gets the listing, to what agents need to know before writing an offer, this conversation is going to give you the clarity most agents never get. We break down the difference between REO, HUD, and VA properties, discuss why today's inventory is so low, how reverse mortgages are affecting the market, and why investors are buying more than ever. Whether you're an agent trying to get into the REO business, or strengthen your offer game, or simply understand this side of the market better, you're going to walk away with real insight from people who've spent over 30 years living in this world. Let's get into it. So what are you seeing in REOs in today's REO market compared to previous cycles? So if we go back to the '08, '07, '08, '09 era, obviously not as many, but how would you compare that with, what was going on then today,
Well,
Dave?
back then in '08 to 10, it was 85% of them were Fannie Mae, foreclosures. And there was only Kathy, among a couple of us that did that, and reverse mortgages. Now there's a bunch of smaller banks that are involved. So that's where the asset companies come involved, and they have the relationships with the smaller banks.
Okay. And
Yeah.
what would you say right now? Because again, still being in real estate and selling, well, not so much, but Linda does all of our stuff for us. But every once in a while, we'll get lenders, or not lenders, investors that will say, "Hey, I want to go to these REOs." And we were with a client the other day that said, "Oh yeah, we're going to go look at these real estate owned properties that are in foreclosure. It's these all these new construction things that are going on and stuff like that." And I'm like, I'm just sitting there going, yeah, I don't
Well,
know. I have no idea. So tell me, what are you seeing right now as far as like inventory level and that type of
yeah.
stuff?
Well, first of all, if you're going to look for REOs, you can go on the MLS and just put in REOs, and it will pull up all the foreclosures.
Okay.
As far as inventory, there can't be more than 100 of them in the. I'd say there's not that many.
No,
There's not that many. I mean, you may have maybe 10 at a time in the MLS at this point. So when we get these properties, we could have them up to a year sometimes, because the process to to get the asset, check on it, see if it's occupied or not. We call utilities to see if it's occupied. We post it. Sometimes it takes up to, years ago it'd take up to a year. We've had some for a year, but now we're getting them out of the property 3 to 4 months.
and we're finding them. Some of them could be vacant for like a year without their maintenance because the borrower just walked. Do you know what I mean? So we can get into a property that has been vacated for quite a long time.
For sure.
So vacated meaning that I'm vacating now, I'm not going to make payments, meaning before they were in the property, maybe they tried to do a short sale and it didn't go to a short sale. Okay. All right.
And
All
they
right.
just decided
So,
to walk away.
sometimes on the reverse mortgages, which we get a lot of those in smaller towns, uh, they had died or their kids are living there.
Yes.
So we're dealing with eviction process with their kids, in the short towns, in the small towns. But the smaller towns are mostly the reverse mortgages.
They are.
The market's not as good in the smaller towns that we get these, where over the years, if they were in Omaha, there would be enough equity that they could sell it. But we end up getting a good amount of those reverse mortgages over the years.
We do.
So tell me, so obviously a reverse mortgage is one of those tools that seniors can use if you're 65 or older, that you can, not necessarily borrow against your property, but use that equity that you have in your property to pay bills and update your house and stuff. So tell me a little bit about that, because I know just our short experience with that is that we had one that was in our neighborhood. We knew the gal, obviously didn't know her situation. Son came to house, who was from out of town. was going through her mail and found that she had a foreclosure letter that was happening. He called us because we were the neighborhood expert, and because we had essentially just had a flyer, and we found out that there was 2 weeks from whatever this letter had said that this property was going to go into foreclosure. Linda called the bank, had that conversation, told them the situation, and we were able to then get the house on the market as is, kind of clean it up as much as we probably could. And it was an investor that came in and ended up buying it because it was a bad situation.
Sure.
But I guess my question is, so obviously this is something that's catching up because reverse mortgages haven't. I don't even think were reverse mortgages a thing in 2008,
Yes, they
2010?
were.
They were.
They were.
Okay. But
They
not
were.
as popular as they probably are now, right?
Actually, we had more of those back then
Yeah,
than
definitely.
we do now.
2012, when I started working for Jay as
Yeah.
his coordinator, that was our primary business,
That was
was
a
reverse
big
mortgages.
portion of the business was reverse.
So they just
And-
basically borrow all the way up back to the value of the property and then
Yeah.
just die, pass
Right.
away, and then now
Yeah.
the kids are left with it.
Correct.
Right.
That's
Right.
that's
It is kind of like a interest only. They're not really paying the loan off, so it makes the payment lower in some cases. A lot of those reverse mortgages that we did get though were Fannie Mae reverse mortgages. So in those cases, when we do list them and sell them, it was they had their HUD guidelines on those reverse mortgages. So the price of the home would have to be the appraisal's value, not $1 less. So it made it tough for us if we got a bad appraiser
Right.
because we couldn't sell them. We're
Right.
sitting in that. We've got one right now. We've had almost for a year because it's overpriced due to appraiser.
and they don't really take into consideration the condition, I find. Do you know what I mean?
They don't, but the appraiser doesn't realize they don't negotiate. So then they start getting smarter where they want the realtor to meet the appraiser and go over all the repairs that the home needs. But if it doesn't sell within 3 months, they have another appraiser go out and give another value.
Right. So essentially, just for agents that are listening to this, because I know that there's a frustration that comes in, and not even from the agents, probably more from the consumer, is that when they're going to go and write on something like this, that you're not dealing with the typical seller who's got the emotion involved in it, who can negotiate the deal, who can make the decisions. You're literally on a keyboard typing in, probably not even talking to anybody, and giving a message off, waiting to hear back 24, 48 hours later. And that in itself, that communication could happen for weeks, right?
It does. Well, and you got the middle people, the asset manager, and then they have to get a hold of the bank. But we're seeing though they just don't negotiate with the reverse mortgages. So, and the thing is, when the agents are taking them there, they think it's a foreclosure. You can get a great deal on it, lowball it, which is not true. It's already valued a lot lower in most cases. But
We don't deal directly with we don't deal directly with the bank, like Jay's saying. We
Right.
deal with an asset company who then presents an offer, whatever, to the bank. So there's that middleman, like he said.
The perfect storm of a terrible situation, meaning that you have a bank who's working with an asset manager who has no emotional connection to anything. You have an investor typically that's probably going to write on it that doesn't have any emotional. So they've got their price that they've got to meet their net bottom line, whatever, and then they've got to meet, the bank has got to meet their bottom line with their investors and everything else. So it's kind of that whole thing of like, what is the value of this property, right?
Right. And as it sits there, it deteriorates,
Right.
molds sometimes, and they require biweekly photos, which is crazy because if you send up old photos, they reject it.
Part of our responsibility is to do checks on the home
monthly status
You know,
report, sometimes weekly.
and provide, current market, the monthly marketing report, like
And
Jay said,
do they,
in
Jay,
case.
do they pay full value commission on this? So if I'm a real estate agent on the buy side, or even on the sell side, I mean, are they paying? I think we can talk about commissions on this, but is it
So
kind of across the board?
no, I think we can. So that has changed over the years. They used to pay out 3%,
Hmm.
and we have some as low as paying out 2.2% in Iowa. But on an average, it's anywhere from 2.5 to 3%. They do pay out because these banks are East and West Coast, and their community does not do a 60-40 split. So they're used to the 50-50 split.
Okay. Okay.
Yeah.
All right. All right. All right. So, how do you think the REO process has changed since the big wave of REO properties in 2008 to 2012?
Well, it's definitely changed just because now you're getting higher prices because lower inventory. But as far as some of the paperwork goes, so we used to have to submit every offer with most of these asset companies. Now there's a website set up where the buyer's agent actually submits their own offer. Thank goodness. So that helps
Right.
us as far as time. I mean, we get 20, 30, 40 offers sometimes on some of these properties.
My goodness.
Yeah, it's
And
crazy.
they like to keep it on the market now. They do the 48-hour hold. So it used to be,
It's true.
back when I started, they would do, you could
Two,
sell
two,
first day on the market, sold same day as
one or two
listed.
days back in the day. Yeah. Now we have some that make us hold us up to even a week.
Correct.
So we just sit there and take phone calls and collect offers.
And having investors as the buyers, sometimes during that process, I feel they'll go buy another property and then back out. Do you know what I mean? Or because they're always wanting to buy,
Right.
investor.
Well, so yeah, and that's another thing that's changed because back in the 2008, it was the homeowners had priority first in buying the homes. So just like I think that's with HUD too, which we don't
Correct.
do HUD, but now it's pretty much investors, homeowner, whoever. It doesn't really matter.
Yeah, they don't give priority to either or.
Do you think that? Do you think that's a good or a bad thing?
With the properties being sold as is, and for liability reasons, if they get a loan on it, they will not do any repairs. I think it is good to open it up to investors too. They end up typically getting when they get multiple offers, they go over ask in price,
Agreed.
and
And keep it in on the market a couple days. That's a benefit to the
yeah,
bank.
yeah.
That
We
who's the
we take a
seller.
ton of phone calls, but
Oh,
it really does get the bank more money for the property. And whenever we do have a property we think that can go with a loan, we kind of recommend just the conventional loan. Because if it gets to where we have an appraiser that calls something out, the deal's over
it
because
is.
they won't allow anybody that can work on the property. So it's just a waste of time.
Then when
That
that
was
comes
going to be my
back and you
next
go to an
question.
investor, they're already gone.
I'm
Yep.
sorry,
Yeah, that
Gary.
was going to be my next question was, in regards if somebody does a 20% conventional loan, I mean, the appraiser, they start calling stuff out. All of a sudden, it's like, who's going to fix the things that they're calling out? Because the
Right.
bank's not going to do anything.
The bank requires them to escrow it if the the buyer's loan would allow it. And they also put in a clause that pretty much if it doesn't appraise, that clause, if it doesn't appraise.
Then the buyer's responsible for the
Hmm.
difference.
Yeah.
But I would say 80% of our buyers are cash buyers.
Yes.
These are not high valued properties.
So, what would you say is the average sell price of an REO?
In the smaller communities, I would say around 100,000. In Omaha area through Lincoln, our MLS at this end, I would say closer to the 200,
Okay.
200
And
range.
would you advise any real estate agent that's thinking ambitiously that they want to get into the REO business that this is something they should do?
I, I I highly would recommend them,
Okay.
not if they sell any kind of homes. It's more task and it's unbelievable amount of work. If I didn't have Pam, I wouldn't be doing it.
I feel you need a coordinator in order to do it. There are a lot of tasks, a lot of checking on code violations and previous bills unpaid, and then you have to get approval to pay it, and we're responsible for paying it. We do get reimbursed, but the process to get reimbursed is long as well. It's not like you just, as far as on my end of my job, as far as the coordinator, there's a lot to it.
You do have to have a pretty good sized bank account to cover all these utilities. We have to put all our names, and we used to, back in the old days, actually have to pay for the trash outs, and the trash outs could be up to 5 to 10 grand for the debris.
So you're saying you have to underwrite all this stuff,
You have
Yes.
to pay for all of it and
and then
hope you
keep
get.
track of all your receipts in order to get reimbursement.
Yes.
And if it goes over a certain amount, let's say 1,000, we have to get 2 bids so that they can see on any kind of anything that's needed. It's a lot.
But that is one thing
Painful.
it
This
is
sounds
painful.
painful.
So some of the banks do have their own pres vendors that they send out, and the bank will pay them direct, which is nice.
All right. So, thinking of the agent that is got a client that is insistent that they want to write on one of these properties and they got cash, what systems or platforms should an agent be aware of or understand if they want to work with REOs?
So we deal with at least 5 or 6 different systems, outsource asset manager company systems. If they're going to be submitting an offer, the best thing is, first of all, read the MLS instructions.
We try to be as detailed as possible in the MLS. I do, right? For the instructions.
Half the realtors, unfortunately, don't read what's in the MLS, but that's okay. I know a lot of people do have problems getting on those websites for the first time submitting offers, but the thing is just to communicate with the realtor before they submit
and just
the offer, honestly.
make sure the buyers knows it's as is. We have that. Would they, after an offer submitted, would they do this? No.
Come back when we have multiple offers, so everybody gets a chance, for the most part, for highest and best, and it doesn't necessarily mean always the highest offer. One might be cash and one might be a conventional loan, and the asset manager could go with that one. One may have inspections, but one may not. It's not always necessarily the highest. So I know some people get frustrated when they go back and they see that they had a higher offer. Well, the terms weren't what the seller wanted.
Which could be similar than a normal transaction, if you're sitting with the normal.
Right.
So that gets me in my
Transaction.
next question. So what makes an REO offer stand out?
So to let your buyers know, if it's priced good, that, most likely with all these people showing the home, you're going to have multiple offers, and you're most likely going to have to go over asking price. Otherwise, you're pretty much wasting your time. And they will do that. They'll keep it on the market for at least 3 to 4 days, and then they'll give everybody a chance to get their highest and best, and then they'll give them another 2 days. 2 days at that point. So if you are, going to show the home and it's in very bad condition, I would find out from the buyer if they have the cash before you waste your time to drive to Platt Smith or wherever. Because they won't even consider a loan on a lot of these foreclosures after they see the mold and everything.
With the inventory being lower, and anybody that's right and below asking, I feel, on some of these it may be taking some of the time of the buyer's agents, because it's, there's a lot of investors out there looking for property. So ours they're very active, in my opinion.
Right.
And we're getting a lot of, and then they don't accept escalation clauses or multiple offer addendums. So it's pretty much the roll of the dice.
Going to give us
Highest and best. Give us
Highest
what you
and best.
want to pay for this property.
Yep. And
Right.
they always give a time frame like 1:00.
They do.
And they have to have it in by then. If they don't, then their last offer is what it is.
Yeah.
I almost think that if a buyer was going to write on an REO, that you should have a video class that they should watch, right? And the agents should probably watch it as well. Because I just think it's one of those situations in real estate that we don't do enough of them. And even when they were popular, we still didn't do, an individual agent didn't do enough of them in order to get good at it, you know?
True.
And would you say that, because your sign goes in all the yards, right?
For the most part.
With your information, your contact information. So do you find that you are also writing offers on these, or is that something that you say, I've got this agent over here, I want them to write the offers on it?
I get a lot of calls with a lot of buyers that want to work with me, and I do refer them off to our agents. In some cases, I do sell a few of them, but they would be more in the smaller communities where we can't really find an agent.
That's correct.
And my name is on the door, so sometimes I'll have more than one offer.
Right.
In the smaller communities. So I do try to refer them off in Omaha, though, to our agents.
Okay. And what would you say is the biggest mistakes agents make when submitting REO offers?
If the buyer's agent isn't, experienced knowledge, like I know that we used to, I don't know if we still do have a class that our agents could take, how to work with investors. When they're showing the home, they have to make sure that the buyer is aware, and it's easy to see a lot of deterioration because the home has gone into foreclosure and could have been vacant, that you give them,
Yes, that's true. But
explain. Go ahead.
I honestly think when a buyer agent is taking somebody to show a foreclosure, they need to have comps, comparables, what this home would be worth if it was fixed up. So that way they could get a vision, and maybe they could have their buyer pay a little higher price for it. But a lot of times, these buyers will go and they'll see a little bit of mold, or the plumbing is unknown a lot of times because of it doesn't hold pressure.
Right.
We get these assets in the middle of winter that are colder inside than they are outside, and they just need to let their buyer know, what those homes would go for when they're fixed up in this current market.
Right. And there's going to be some challenges, right? I mean, it's not like just because you see, almost expect what you see is probably even worse than what you're not seeing. I mean, worst case scenario, right? I mean, best case is that you don't have any problems behind the walls, but worst case, chances are you're going to have other problems, right?
For sure.
Yes.
All right.
For sure.
So what's the differences between REOs and HUD and VA and foreclosures?
So we talked about the REOs, which that's pretty much what Jay and I are, and the VA loans.
Yeah.
Which is primarily our customer.
And the HUD, Aaron Horn does.
Yep. Aaron Horn is our local, agent that handles those. And then the HUDs are the ones that it's a government owned, but they're FHA loans that have gone into foreclosures. And then we know that the VA foreclosed ones are the VA loans that have gone into, default. And that one is, so of course the HUD is the U.S. Department of Housing and Urban Development. Sorry, I'm jumping, which is the FHA. VA is the VA backed loans that have gone into default. REO, I say that REO, real estate owned. And then we get them after they've gone through auction, and then we'll get them as a REO.
And REOs are a lot of the smaller bank ones, but the VA ones are, we have to go through an outsourced company for those too.
Mm-hmm.
So the REO ones are typically, they were a conventional loan type situation?
For the most part, yes. A lot of them, yes. Mm-hmm. Yeah. You're not seeing as many Fannie Mae anymore. I mean, that used to be the majority of them. And the reason why we got so many, because I did the reverse mortgage Fannie Mae ones, which was under the HUD guidelines. So the appraisal value had to be the price.
I appreciate you guys jumping on here. And what I would like to do you have anything else that you think an agent or a consumer, probably not many consumers are going to watch this, but for the agent's audience, that they should know?
Go ahead, Jay.
Go ahead.
We're really just focusing on, of course, the buyer's agents and our industry because it's hard to be a list agent.
You mentioned, I mean, right. The good thing about the foreclosures right now is there's such low inventory out there right now. So they're going to sell pretty much no matter what, unless you're in a small town.
Exactly, at or over asking, because like Jay said, the inventory right now on the market,
that was a big difference back in 2008 where we had 6,000 to 7,000 homes on the market, and they were selling for 20 grand. It was crazy. So if somebody really, really wants a foreclosure, and they don't have the cash, maybe talk to their bank and see if they could get some kind of line of credit or something like that, because that works just as long as they or talk to their bank and maybe see if they can go conventional versus FHA or VA, with appraisers being a little bit not so picky on the plumbing, etc. And if you're going to be looking for the REO properties for your clients, look under REO under the multi-listing service, and that's where you'll find them. And they can always get a hold of us because we have a lot of them that are not even on the market right now.
A big thanks to Jay and Pam for breaking down the REO world with us today. We covered a lot, from what actually happens in the auction process to how asset managers make decisions to the realities of today's low REO inventory. We talked about reverse mortgages and why they complicate the process, what agents need to know before writing an REO offer, and the key differences between REO, HUD, and VA properties. If this conversation helped you understand the REO side of the business more clearly, do me a favor. Hit that like button, subscribe, and share your biggest takeaway in the comments. And thanks for watching. You will love this next video with Kim Stevens, one of the top short sale professionals in the business. She will break down what happens after you identify that the seller is in a possible short sale situation. That video is coming up right now, so go ahead and click over to the short sale conversation with Kim Stevens.